Hey, what's up guys? Joe here from Right Way. Today we're going to talk about what is Wholetail. I'm sure some of you wholesalers have heard that before. We're just going to kind of cover the basics of it. So, what is Wholetail? Wholetail is a strategy where you actually own the property. So, we own it or close on it. And what we're going to do when we close on it, we're going to list it onto the MLS. Now, why is it an advantage to list on the MLS? Well, the MLS is your basically just an extended buyers list, right? So instead of emailing out to your select few buyers, when you put on the MLS, you have maximum exposure. So that's going to lead to a higher sales price. So a couple of the key items that you're going to be looking for if you're going to take the decision to close on the property and list it is low days on market. Right? Because we do not want to be sitting on a bunch of properties where you are paying the debt on that property. What I mean by that is if you're using a hard money loan to close on the property, well, you're going to have your closing costs and then you're going to have your interest that you're going to pay monthly. So it's very important that you're buying a property that the days on market is low within that area, so that you're not paying that every single month and eating into your profit, right? So another one is a lighter rehab, right? We do pride ourselves on getting the correct rehab, but if you have drastically undercooked your repair estimate, then that can be the difference between a deal and not a deal. Okay. You also want to look for stuff that's a little bit more cookie cutter, right? You don't want to be buying a 2,800 square foot property in a neighborhood where all the comps are 1,400 square footage, right? That's not going to equate to a higher value, and it's going to be kind of the weird house in the neighborhood. So steer clear of doing wholesale for anything that's way too large. It's got a funky layout. Maybe it's a two-story house with a weird extension, but everything else is one-story ranch style 3-1. So what are some of the negative aspects of closing a wholesale deal, right? One of those is going to be you're going to have to cover the closing costs. Another one was going to be if you're not a licensed agent, you're going to have to get an agent to list that for you on the MLS. So, agent, right? And what happens if you get an agent, you're going to have to pay them 3% for the listing, right? Once it closes. You're also going to have to pay the buyer's agent 3%. So you want to be very careful when you're outlining all your costs to see if it's worth doing a wholesale. But it is a fantastic strategy. It is a way to sell at a higher percentage, and it's a way for much more exposure. So another one that you're going to want to look for is a lower ARV. Here at Right Way, we tend to wholesale properties that have about a 200K ARV and below. We like them with the repairs are 20K and under. And again, we like them with low days on market. Right. So the goal is that you are listing it to where you're seeing comps sell quickly in that neighborhood for a similar price point. So if I have a 200K ARV house and I look online and I see comps that are selling for 130, 140 in the same condition, very similar style house, then I know that if I list it, it's going to sell pretty quickly. So now I'm pairing up what I can potentially net from a wholesale deal versus a wholesale deal, right? So in a lot of instances, it is a powerful strategy that it would be more advantageous to list it on the MLS, right? And we remember the MLS is the multiple listing service. So a lot of you, you might be, thinking, oh, I don't have enough money to close on the property and list it. So who are you going to look for? You're going to be looking for private investors, or you're going to be looking for hard money lenders. And hard money lenders will lend on a wholesale deal, right? Because it's asset-based lending, and they are lending against the value of the property, right? Most hard money lenders are going to lend between 70 to 75% of the appraised value, but that has to include your repair and the escrow holdback. So when you are asking a hard money loan company to fund on a wholesale, you are asking for the purchase price, right? Purchase price only, right? No repairs made. So what are you going to be fronting on the cost? Generally, you're going to be fronting your standard closing cost, right? You're going to be fronting the hard money loan points. So that's going to be 2 to 4%. Let's say you have a doc fee with the hard money loan company. You're going to have your escrow fee. And any other little miscellaneous fees on the HUD. So you really want to break down the costs and see which is going to be better. Are you going to be able to sell the property for, it's just going to depend on what your market is. Let's say your market is a 78% market like we're seeing right now at Rightway, and what we sell to our investors around 78%. So if your ARV was 200,000, and let's say your repairs were 20,000, then what are we selling it at to an investor at 78%? We are selling it at $136. Now, as we covered in a few other episodes, our average fee over the last 100 deals that we've done have been $8,500, right? So we would be selling it at $136, but we would offer that homeowner $8,500. So we would be paying the homeowner $127,500. We would make $8,500. But now let's say that this property has potential to net us more money via a wholesale deal. We know that it has a 200,000 value and below. We know the repairs are about 20,000, right? Maybe we got our contractor in there to verify that they could do it. And we can see that there's low days on market. And low days on market is really anything that's less than the standard average days within your market, right? So right now in Harris County, it's about 52 days is the average day to close, right? So it fits all this criteria. Well, now we can list it at a higher amount, okay? But we have to account for all of these costs. So let's say that we bought it at $127,000, but we listed it at 80%, right? Because stuff on the MLS is always going to sell much higher. So we have 200,000. Now we got 80%, right? And we're going to reduce our repair from that. So we are selling at, on the MLS, 140,000. So the difference on this one is not huge, right? 136 to 140. So on this scenario, I would not do it because I'm going to have to pay my closing costs, my hard money costs, my doc fee, my escrow fee, right? But if I was to get this to a lower amount, I would definitely consider wholesaling the property. So every single scenario, every single homeowner scenario, you really want to put the two together. You want to be working out, is it a wholesale deal? Is it a wholesale deal? Are my days ridiculously low? Can I get above 80%? Maybe some of these properties, they're just flying off the market. Maybe this 80% is actually closer to 90%, right? Or let's say that the repair is so low that you don't need to account for the 20,000, right? That somebody could get in there, they could buy it, and it could actually pass FHA or an inspector requirement, because the other houses in the neighborhood are all selling in the same condition. Let's say it doesn't need 20,000, then the Wholesale would definitely be the right way to go. So let's say that this 20,000 is, you don't really need that 20,000, right? Let's say it's cosmetic. Now you have expanded your buyer pool, okay? Because in a lot of situations you'll see that the aesthetics of the house is not the only or the primary reason that somebody needs to sell their property quickly. Maybe it's a financial issue, maybe it's a divorce issue. You know, financial, maybe they're going into pre-foreclosure. They can't wait for you to contract it for 2 weeks under option and try to source out your buyer. But you know it's a deal, right? They're asking $130,000 on a house that's worth, you know, $200,000. But you know that the 200,000 or 180 is in similar condition to your property. Now, for sure, I would consider doing that as a Wholesale. I can close it quickly if I have a good relationship with my hard money lender, and if I'm an agent, or if you have a good agent who can circumvent the 3% listing, you're gonna have a much bigger buyer pool, right? You just expanded everyone who's looking at your property. And the proof is in the pudding, so to speak. You have a very low days on market, so you can almost guarantee that if you list it on there, you're gonna get a good amount of offers in there, and you're going to net more than you would if you were just to literally sell it via Wholesale.